Alrighty, I hope you guys had a fun trading day today. It was the most calmest down day we've had in a while. It was a pretty calm, healthy sell-off. It was now surprising to some in a few aspects and not so surprising. There wasn't really too much that happened. I'm going to go over a few things, you guys. Before I get into it, make sure you guys are here for the watch list tonight. That's on this channel, and then also the live stream. We are on there, youtube.com/thestockmarket, Monday through Friday. We're trading live, so it's even pinned in the comment section below. I better see you there in the morning. Shout out to chat. What else was I going to say? Like the video. Yes, turn that thumbs up blue, but let's talk about this. So everything that happened today is based off of what has been the reason the markets that dropped the markets Monday, kind of made the markets go up and then down Tuesday and come over here, as you guys could see, and then where we've ended up, today now with this type of move, and it's the bond yield. So it's surprising to some because the curve is further inverted. Now, I forgot to show this in the other video. If you guys want to, this is what we've been looking at on stream. You can just Google bond rates. There's two links I like to use. Here's the CNBC one. It'll give us the easy one, and then now the bond rates posted from the Treasury. Now they updated today. So now we get to see the damage, even the closing. It's bad, man. That's dirty. Keep ad blocker on, but you guys should turn your ad blocker off on my videos. Yeah, but here, it breaks it down very simply. Down is down, and that's something now we've also. So we've been pointing out the TLT, and sorry if this is repetitive for some people, but some people are unfamiliar. This is an inverse of the bond rates, more or less, and I'm generalizing that there. But if the TLT goes up, that means the bond rates are going down. And now this is what's been the issue, because as you see here, the 3-month stays relatively fixed, even though it could drop. And I'm going to show you guys here from the Treasury, but all the other rates are dropping. And now here's the problem. That 3-month simply is at 2.4, and that's higher than every single rate all the way up until the 30-year. So this could get even scarier. Literally at this pace, this is why if this does continue, the markets can start to panic. And I'm going to show you guys some other things to pay attention for globally that occurred today. But if this keeps continuing down, that is what the market's been on the lookout for. And here it is from the Treasury. And, this is that Friday, leading into Monday. Let's put up the 5-day chart. Right there, from the 22nd, and you can see this is where, the rates, the 3-month, will focus on the 3-month. That's at 2.46. It was at 2.49. Again, dovish Fed, but now here's the 10-year is at 2.54. Then it dropped from there to 2.44. And since then, the 10-year has been going lower. And as you see, the 3-month has also dropped right here, but not as much as the 10-year. And now the crazy part about the 10-year is looking here at March 1st. It was up at 2.76, so that's now kind of where the 30 years approaching that level. It's not too far from there, so that's the next question of if that happens in another 2 weeks, it could be interesting. However, it doesn't mean the markets will drop, and that's what we saw. The last few days we've been seeing gap ups and drops, so that's what occurred today. But the main driver of everything today, I think, at least that kept the markets up. We saw Dow Jones Transports, that was up, and that held the markets up. Everything closed, barely down, with NASDAQ and tech being another, consecutive day loser. Semiconductors got killed. Here is the SMH. That's the semiconductors ETF, but I think it could go down a little bit more. After hours, we did have Lululemon report, so that could be good for some retailers, even maybe other retailers. I might look at Goose tomorrow, but we'll see if anything. Again, watching how all this plays out is going to be interesting. But the main driver here was everything that occurred with the rates today. That was a big factor of bringing the markets down. And again, it was more of a gap. It was a slight gap up that just went pretty much just straight down. And then and we had a slight bounce, but it was very, as we said on stream, it was pretty calm. It wasn't a straight vertical bounce as we've seen in some other areas, or when the market has done this. So that was interesting. But then the other side of the coin now is Europe and Brexit. So the pound is moving after hours. There's people in, Theresa May said she's going to resign, this and that. There's a lot going on. And really the next step is she might now if they're having some decisive votes. There's, again, we could get all up in the mix now. That's when we were ahead of it, but the market's now telling us something. There's a lot going on. Watch even for the deadline, the initial deadline of the 29th, and then the EU said they're going to give that extension till the 12th of April. But watching how things are playing out, it's not looking good. You know, again, Theresa May says she's going to resign, but look at now the markets. I brought this up in the recap yesterday, but again, it happened. Germany's bond dropped even further. So we were highlighting this here, you know, on March, 19th, it was at about 0.10, and then the other day it dropped, and then closed yesterday, went from negative 0.02 to 0.01, but today it dropped to negative 0.04. So if that keeps persisting, you know, that's going to be something to watch. And like I said, last time we even saw that downward trajectory, it was there. And, you know, this was literally on the German bonds. And you guys are even seeing with this, I gave this example earlier. I did this on the live stream last night and today, but here's even this simple example for you guys to understand. It's like, why are the bond rates, you know, drawing the market down, and will they continue to? It doesn't necessarily have to, but take a look here. We'll go on like a 200-day chart. This is since, you know, October, and that's when we saw the first drop. And that's really when the rates started to decline rapidly. You know, you saw a slight drop in October. It bounced up November, but November, December, the rates kept dropping all the way down to, you know, January 2nd, and then they bounced, you know, remember these dates here, January 2nd and January 18th. And that's, you know, pretty much the bottom here coming into the new year in that December 24th and then December 18th. So you see, it was pretty much following the S&P 500, and this is the 10-year. Again, this is relating to why the market today has gone down, has been getting pushed and pulled with rates. But you see it bounced with it, and it was flowing along with it, but the bonds didn't really go up. And then you saw the bonds pretty much plummet. They were following the S&P, and they were pretty much moving side by side. But now there's that big divergence. So either bond rates are going to have to come up, or if they keep dropping rapidly, S&P is going to come up. But that's been the issue. That's the simplest way to visualize it, in looking at it in the most, you know, elementary way, comparing this to, you know, what's going on with the yield curve. But that was pretty much it. There was, you know, and then Boeing, I should probably get that up. I don't want to miss that. We watched that today. That, at least, you know, for the key thing about the market, everything moved in tandem. There wasn't really too big of individual movers here or there. The Chinese stocks behaved a little interesting. We made some plays on there, so I'm going to actually keep a watch for there, but we'll talk about that on the watch list. But Boeing, today also had the first hour before the hearing. The hearing's still going on, I believe, till now. We're probably going to see the effects of that, but that was the FAA hearing. You know, the Congress interviewed the heads of the FAA to ask them about their independent process and all that. You know, and again, it could help Boeing, but right before that, hour prior, Boeing announced they had a software update and a fix for it, and the stock popped kind of like it did last time off similar news of an announcement, but it didn't hold it as much, and the volume was not as strong, but then it came into the hearing and it held. So this is going to be interesting to see how that plays out, but yeah, that's pretty much it for the most part. So I'll leave it there, you guys. Make sure you subscribe to the channel, drop a thumbs up, and I will see you for the watch list tonight and on stream tomorrow morning. Let's go. Woo!